Welcome, everybody. Thanks for joining me. It is the week of 5/17/2024. Lots of news this week, starting with the fact that the NFL schedule was released. I find that important. I'm happy to see it. Feels like football is right around the corner, and I'm ready for it to start. Let's just put it that way. Also, this week, Bridgerton released last night, season 3. That's a must see if you want my opinion. I love that show. And then also, the world buzz right now because of Harrison Butker's commencement speech. And I'm all for it because, well, if it creates any amount of chaos in the Chiefs locker room, I am here for it. Because I am over the Chiefs dynasty. So bring it on. Keep talking, Harrison. Create a little division in your locker room. It's good for my team. Anyways, let's talk about really what you're here for. The mortgage rates, what's going on, what is driving our rates this week. We did get mortgage applications, as always. Purchases down, -2%. And then rates, refis up 5%. So interesting with the interest rates being a little chaotic as of late, that we're seeing that activity pick up with refinances more so than purchases. We had a really good past 2 weeks, really, when you look at the 2 weeks as a whole. So the fact that refinances are picking up versus more so than purchases speaks a lot to how the consumer is doing, in my opinion. Jobless claims initial, those filing for the first time, down 10,000, but continuing up 13,000. So again, we're closely watching those numbers because that does give us a read on unemployment. And unemployment, I think, might be a bigger driver right now versus inflation numbers as it relates to the Feds deciding when they might start doing short-term interest rate cuts. So if unemployment goes up and continues to inch up a little bit, maybe that will encourage them to move a little faster on those cuts. Retail sales month over month, 0%, showing that the consumer spending is starting to slow. And the previous month was revised from 0.7% to 0.6%. Can almost speak English. And on that note, Walmart released their sales numbers. And the reason why Walmart is kind of is paid a lot of attention to in terms of their sales is because when we have recessions, Walmart does better because a lot of consumers, I guess you could say, trade down to Walmart. So rather than going to higher end retailers, they go to Walmart because they tend to be a little better priced. And Walmart did indicate that their sales were not inflationary driven. So their prices have remained consistent really over the past several months. So they're just seeing that more consumers are spending their money there. The New York Household Credit Survey came out as well, showing that delinquencies are definitely on the rise. Credit card delinquencies up from 3% to 7%, and that's a pretty large jump. Auto delinquencies up from 1.5% to 3%. Now, probably the biggest news this week was the CPI report. This is our inflation numbers. The Fed's favorite measure is PCE, which comes out at the end of the month. But CPI is still a good indicator. And then you can see here from this chart, the headline number was at 3.4% year over year. The core number is now at 3.6%. They're just kind of holding steady. We're not making a lot of progress at this point, and there isn't much. You really shouldn't expect that inflation is going to change much over the next couple of months. Maybe go up a little bit, not necessarily down, because we continue to see that shelter costs, gas, and motor vehicles insurance, key components of the core number, are continuing to, they're on the rise. It's more expensive. So that has been kind of an obstacle for improved inflation numbers. But I do want to point out, if you look at the year over year numbers from the peak in 2022, we have made a lot of progress. So I wish the Feds paid a little more attention to this. The headline number at its peak was 9.1% for inflation, and the core was at 6.6. So we have definitely made progress. Now let's take a look at the MBS chart so you can see what the MBS markets is doing, because this does drive interest rates, and we want to see this continue to go up. Now, today and yesterday, the MBS market's down. We're in the red, so we have lost gains since Wednesday when we had really positive reaction to that modest CPI report. But still, this is very promising. Over the last couple of weeks, we have seen vast improvements. Interest rates closer to 7% or just under, depending upon your situation. So good to see this. If you have any questions about what you might be able to get for an interest rate, feel free to reach out to me. Happy to run some numbers for you. Otherwise, thanks for joining me today. I hope you have a great week. Enjoy Bridgerton if you're a big fan like me. And if you have any questions, feel free to reach out to me. I do appreciate when you like my videos. Feel free to share them as you deem necessary. And otherwise, I will see you next week.